One, it's Chris from Solstice ATR as well as Excel. You can find me on the website, Twitter, Instagram, as well as Discord and on YouTube. Remember to hit the smash button. Give us your like, give us your commentary, let us know what you think, and share it with your friends and loved one. We're going to talk about the overall market for May 18, 2024, and the different sectors in the video because I will be traveling this week around the US. I won't be basically on my desk 24/7 for the trading hours on Discord. I'll be coming in the morning and basically checking the market in the afternoon, and I'll be giving my commentary on Twitter. Remember, we use this for illustration use. We're not a broker dealer. Our performance doesn't give us any future results. And remember to check the website policy if you'd like to get that material before you do, because there's copyrights on it. Let's go first by taking a AI on the S&P 500. What I want to do is look at the 11 sectors in the S&P in relationship to the earnings that we have coming up in the weekly, as well as the fear and greed, which is the VIX, it's on the floor, and our American dollar, the dollar sign DXY. I did not put it because there's different brokers that have different, they use DX, they use DXY, they use DOL. So it depends on where you're at on your trading. I am using an 18 simple moving average and a 50, which is lined up in the green and red. Whenever they cross from top and bottom, this is bearish. Whenever they cross from the bottom, the 18 above the 50, this is a bullish cross. On the weekly chart from a 3-year historical rate of return, we have, climbed up in 2021. 2022 was the reset. That was the October 2022 low. You can see it. Our range was in January low and March low of 2023, and that was the Silicon Valley Bank going belly, and they basically need to bail them out. That was the October low when they retested that area. Bounced off and closed on December high. This was our January low of 2024, and our April high and April low for 2024, and we rallied back. An inside candle, a doji, climbing up, which is a bullish one. We cleared eventually this week on the S&P 500, the high, but we have RSI divergence, which is the average. The range is usually between 20 and 80, but I use a 78 and a 23, which are Fibonacci numbers, 56.2. That should be 23.6. I did not decimal place it. I did not do the decimal place for the 78.6, so I just used 78, which is close enough to 80, and I used the 23 close enough to the 20, not a 70-30 on the RSI like everybody does. I want to get the extremes of it. When we bounced off this week, we had a nice reversal from the 50, clearing the 61, climbing towards the 70. The RSI has not cleared the 70 and has not crossed the average divergence between the 2 points when we climbed up, but we are bullish on the weekly chart. Last but not least, I want to look at the sectors in the S&P, which is the E-mini, the Nasdaq E-mini, the Russell E-mini, as well as the Dow Jones Industrial Average E-mini. These are the sectors on an average true range combining the four, which gives us a low midpoint, a low target, and a high target. We climbed up this week. We had an average ATR 612 points on the combination of the Dow, S&P, Russell, and the Nasdaq. And we had a VWAP of 61. We closed a little bit rich away from that VWAP, 66,103. High and the low, it shows where the open is, where the high was, where the low is, our pivot is. The most important thing on the short term, we were in a downtrend, but we reversed on Friday. The term was up on the 15-minute. The long term was up on the 30-minute as well as the 15-minute. The MEGA8 is the NASDAQ 100, which is Apple, Amazon, Google, Facebook, Microsoft, Netflix. They had a good week. Google had a good week. Tesla starting to recover. Pay attention to NVDA, which is coming earning on Wednesday. And we're going to look at the S&P sectors. XLE, you can do the research on your own. Consumer staples, XLY. Financial is XLF. The utilities, XLU. Material is XLB. Consumer staples is XLP. Info technology is XLK. Real estate LRE. Industrial is XLI. Healthcare XLV, and telecommunication is XLV. These are used for illustration use. I'm not telling you to trade ETFs. I'm not telling you to trade equities. We're going to trade what the charts offer us and what we have an opportunity when we are at the low or high. And I had basically David Brill as well as Kevin Kabuki in our group call out Baba this week. I had called Netflix and Google. We did very well with them, as well as Google, as well as Baba. But not that, last but not least, remember to check us out on the website, get in contact with us, give us your commentary. I'm going to go to the first slide so everybody knows where you can check us out and how to get in contact with us. I hope this is helpful. Let's go to the first slide I have up here using the Thinkorswim through Schwab, no longer TD Ameritrade. You can see the NASDAQ100 on the weekly has recovered a little bit more stronger than the S&P. The average between the RSI divergence, and we are at 64 point, let's call it 8 on the NASDAQ 100. Pay attention in case we reset to the 61, or do we continue towards the 70, 80? Let's go look at it on the daily chart. The daily chart shows us that the S&P 500 in the last 5 days, if I do zoom in here, we had that push on Tuesday. That was Monday. Tuesday, we got that little gap here. There's a little gap. What I want to do, put an oval here. Mark it for everyone to see. You can see it. That's the gap. If I edit the property, I extend it to the right 4 days. This is the gap that you're going to pay attention in case we do come back towards that area. This is an opportunity buy zone. So make sure you pay attention to that gap, or we continue and go back up. The daily on the NASDAQ was a little bit weaker. We closed a little bit below the Thursday's candle. You can see 11 points. Let's take a look at it on SPX. The SPX, and I'll use the E-mini as well on there. Let's zoom in here. If I zoom in here, you can see this gap here. We rallied. This is the 5 days, but the S&P 500 closed inside the Thursday candle on a doji. This is very important, or a star. Pay attention. Do we continue up, or do we fill this gap between this candle and this candle? If I can make the color any color I like, but I'm going to show you how to look at it so everyone can pay attention to. We can mark it in a baby blue. This is the area that you have to pay attention in case we come back, because this is the test 1, test 2, the failure, the reverse. We still have a gap down here. You can see it. That gap yet. If there's going to be continuation, we're going to look for the upside. We are in a linear regression uptrend. Do we come back to the 50% reset where the over continue higher, or do we break out and continue to the upside of that linear regression channel to the top? And you can see where the RSI is at 75.2. We'll take a look at, for example, I'm going to show you Google, how strong it was. I'll look at, Google. I put the $ by accident. You can see how Google rallied back up very strongly in a 5-day continuation. So these are the things you have to look at. Baba, Kevin, and David called this trade. Baba came out of that downtrend channel. If I draw a downtrend channel this way to the downside, what you want to do is do your homework and be able to understand the sectors. Or even if I connect this point, I activate it, and I grab this control point, which is the higher area. Once we broke out of this area, we consolidated, we got this gap. We rallied up, came back, retested it, rallied up on the earning, fell back down on the earning report, filled the gap, and continued. There's a gap here. If I put this oval between here and here, there's a little gap. I want to show it to everyone so everybody understands it. Or I'm going to use a box. That would be a lot better to see on the charts. I'm going to create this box between these two levels. Edit the property. I'm going to make it back as far as 501 and as high as 520 so everyone can see it. If I zoom it back, this is a very important area of consolidation in BABA. It does not have to fill this gap. If this candle, because we tested the 38.2, coming back to halfway of this candle or bouncing off the close of this candle and the low of this candle, this will give us opportunity to continue higher. So trade what the charts offer you. Don't be biased. But if we get a reset, this would be the opportunity for a buy zone in BABA. Let's take a look at the E-mini 500 Pro ES, and I want to use the micro ES and the S&P 500. Reasons because I use the S&P myself, E-mini and the Nasdaq E-mini. I have too many pivot points, support and resistance, and so on. I don't want to complicate it for people. On the short term, we are uptrend, midterm uptrend, long term we were in a downtrend because of the daily test supply. We were testing the supply on Thursday. We rallied back up, but my concerns on the daily chart on the S&P 500, if I go to an intraday, I do a 30 days and I use a 4-hour or a 6-hour chart. It doesn't matter. It's going to show you the overnight in the gray area, which is the Asian European markets. Our trading hours is from 9:30 a.m. East Coast, which is New York, till the 5 p.m. close East Coast. So the E-mini trades during trading hours on weekly basis, except Sundays it closes in 1 hour in the afternoon. So I want to look at from Sunday through Friday the range on the S&P 500. If I take a look, this was the high for the week, the low for the week. What I'm going to do, go get a measuring tool from the top to the bottom. This is my extension. I'm going to go back 1 week, edit the property. I'll go back 3 days back till the 11th. That was the week that we started from Saturday, Sunday. Sunday is the market opens up in the afternoon. This was our low on Tuesday. This is the high on Thursday, and we reverse back. We are holding the 18 SMA, and we went back inside the range of the Thursday candle. If we're going to continue, we're going to pay attention. If we break above the 53, let's call it 50, and we have to hold 53.0550. This is a bullish candle on Friday into the close when we pushed up higher. So pay attention to the S&P 500. Usually the 18 SMA and the 50 are buy zone. 0 and the 20 and the 100 and the 80 are usually buy or sell zone, looking at the extensions to the upside where we get overextended or oversold for either side for reversals. And I hope this is helpful to help you understand how we look at an equity, how we look at an ETF according to the weekly range as well as the daily or the prior day when we come in to the market with an open mind, not being biased. We trade what we see. Let's take a look at the mini NQ. We are in a similar situation in the mini NQ. I can take the high to the low on Thursday, extend it till the 11th, edit the property. Even if I go back to further down, let's say I even go till the 3rd or the beginning of the month, at least I know where my support is. You can see where that consolidation was. We were consolidating for 4 or 5 days, and we eventually broke up. Pay attention to this candle. It is not lost on Monday of the open unless something dramatic happened. This is 50% of this candle. If we end up falling, we're going to come back to this consolidation between 18,320 and 18,275, which is the support, because this is the consolidation in this area for continuation higher. But if you lose that, then you look for the backside of the support and resistance where the 0 line is in order to revert back up. So I hope this video was very helpful. I want to keep it short and brief. Remember, check us out at Solstice ATR. Get in contact with us. If you have any questions, please let us know. We're here to help you to understand how to trade with not being any bias. Take care. Over and